Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over how I analyze crude oil inventories. And if you don't know what crude oil inventories are, maybe you don't trade crude oil, or maybe you just don't really pay attention to that market in and of itself, that's fine. Crude oil inventories are a weekly announcement that happens, obviously, specifically for crude oil. They come out every Wednesday. Unless Monday's a holiday, then it'll come out Thursday. But every Wednesday, we have crude oil inventories at 10:30. Now, at 10:30, that's when things go crazy, because that's when the inventories come out, and the inventories are basically telling us how much inventory they have of crude oil. Do they have a lot of excess? Do they have not enough? Are they under what they were expecting? Etc. A lot of information fundamentally can be, derived from that, but from a technical perspective, because I'm not much of a fundamentals trader, I like looking at it from a different perspective and seeing what is the news and how is that responding, or what is the market doing in response to the news. Effectively, is it moving in a way that we expect it to? Now, here's the cool thing about the inventories. The day before inventories comes out, they have another report called the API report. And the API report is the weekly crude oil stock number that gives us a little bit of a forecast as to what to expect for the inventories. So they come out the day before, and the reason I say that is because, again, if Monday's a holiday, then they'll come out Wednesday instead of Tuesday. But they come out Tuesday normally at 16:30 Eastern Time. And you can see these on investing.com's economic calendar if you're trying to figure out where to find these. But right here, we're looking at last week's, and from the time I'm recording this, it might be 2 weeks ago, but we're looking at the API report for Wednesday, October 13th. And in this case, the API report, you wouldn't have known this number yet, but the API report came out at 5.213 million. Now, if we were to look at the inventories, which comes out the day after, we can kind of see, okay, well, if the API report came out at a positive 5.213 million barrels, and the forecast for tomorrow's inventories is 0.702, and the forecast for this was 0.14, that was obviously a total miss. So realistically, the API report is giving us a heads up that tomorrow is much more likely going to be a bearish number the next day going into inventories. They're forecasting 0.14. Here they're forecasting 0.7. Okay, so if it is a positive 5 million barrels, they have 5 million more than they expected it to have, then bump this up a little bit because this is 0.7, and you're at right around 6 million. And that's right where the number came out as. This gives us a really good idea as to what to expect for the crude oil inventories. And the cool thing is we can base that information on going into the next day's inventories and how to play those inventories. So if we take that information, let me move this over here, and we look at how this all played out. Remember, the API report on the inventories for crude oil comes out at 16:30. So if we go across the board here, the inventories or the API report came out right here. Now, you remember the API report, as we saw on investing.com's calendar, the API report came out at a positive 5.213 million. That means that they had 5.213 million more barrels than they expected to have. That would be, well, you'd expect it to be bearish. But the market responded bullish. Now, what's interesting is when we go into the inventories the next day, which happens at 10:30, that happens over here. This was the inventory report. And you'll notice where and what happened. The inventory report ended up being bearish. Now remember, the number came out at 6.088 million. The API report told us that we should expect around 5.2 to 6 million, and it came out as expected at around 6. So the natural response then after inventories for quite a while was bearish. Effectively, that means that everything that happened above the API report candle's high, because that's where the pullback ended up going back to on inventories, everything above that was effectively sell territory. Everybody was expecting the numbers to be bearish. They just needed an excuse. Now, if we take structure and we add a little bit of structure to the game, then we have a 5-wave completion with a wolf wave ending. We also have a double top retest, a breakout pullback. There's a bajillion different reasons inside of here as to why the market is going to want to pull back to it. But when we're looking at the inventories in the API, that's what I'm looking for. I want to see, okay, the API report is telling us that this is likely going to be bearish. We're going up into the inventories. That doesn't make any sense. I'm going to look for sell opportunities because I know that more likely than not, the probability is in my favor that we should have a bearish response on the inventories. It's not going to work every single time because nothing ever does in the markets, but having that little bit of a probability bump if you're looking for 2-to-1s, 3-to-1s, etc., can be a huge difference if you're looking in the long run and something you can very reliably kind of bet on. So that's going to be kind of how I look at crude oil inventories and how I like to play them. Obviously, the API report in and of itself, if it creates a large enough candle, can have a level of support or resistance aspect to it. But I'm looking at it more from the fundamental perspective and what's going on underneath the kind of underlying, right? What are the candles telling us and what are they hiding from us? And what can we use that information to find, right? What kind of setups can we get from that? And that's where all of that information really kind of boils down to. It's all those little clues and nuances inside there. But that's going to do it. Hopefully you found it useful, interesting, entertaining. And of course, if you have any questions, feel free to drop them in the comments below. Or if it's a more detailed question, you can always shoot me an email as well, jhb@ssftg.com. Until the next one, enjoy, rest up, and we'll see you all then. Thanks.